Market observations for Perth, Western Australia, where today we're going to be unpacking where to potentially target over in our Western city capital. Now, this is an area that we did focus on about 6 months ago. So there is a video, if you haven't checked out already on our channel, that we do cover this in a lot of detail. It's now time for a refresh. So 6 months has passed. I will be touching base with some of those previous observations and see which way the market has gone in that time. I will be diving into 3 local government areas. One of them is too heated, one of them's heating up nicely, and the other one is potentially, we're just missing out on that buying zone. Stick around towards the end because it's really important. I'm going to be doing suburb and street level analysis. It's not enough to just get a local government area, off the internet, off a magazine, from an educational course or group of people. It's not enough to get a local government area. It's not enough to even get a suburb. If you're leaving yourself at the suburb, you might be leaving up to 25% relative capital growth on the table. We have to become local area experts down to the street level. I'm going to be showing you some of that analysis towards the end of the video, so definitely stick around. Now, this is something that we spend a lot of time doing. We enjoy doing it, but it definitely, there's a lot of people involved to get this content to you as often as we can. If you do like what we're doing, please encourage us. It means a lot, and I love watching and reading the comments and communicating back to you. Please comment, please subscribe to the channel, please hit the bell icon so you're the first person to find out about our new videos and research, and spread the word. Dropping a link into a conversation is great to continue that conversation going. It will be all much appreciated. So without further ado, let's dive in to the 3 local government areas we're focusing on today over in Perth, Western Australia. First things first, Joondalup. Okay, we've had a few comments recently about pronunciations. I am based out of Tasmania. Whilst I am very familiar with this wider country, sometimes the pronunciation does fail me. So I do apologise to the locals who do take offence sometimes. We're focusing on this local government area first because we did look at it 6 months ago. It was an area of focus. We have been extensively looking in this area now for many years, multiple years. In fact, doing a lot of wonderful things there, a lot of very happy clients and investors that we've worked with closely in our private advisory. This is one-to-one, okay? There's a lot of things going on behind the scene that are not publicised publicly. So let's dive into Joondalup. Remember, I'm only going to talk through this once. Property investment is a science. Today we're talking about the local government area analysis for Joondalup. That helps us get to the where, not necessarily exactly the when. We've got to have 2 layers of our research. It's not enough to get one, score or metric. We have to look at the where and the when. A metric cannot do both at once. Generally, we need to have macro or local government area level analysis to understand the where, and in doing so we understand and we describe it as the predicted performance. Once we find an area with great opportunity, with great predicted performance, we need to determine, is it the optimum buying window into that market? It's 2 separate investigations we need to do. If you're doing one, it's too simplified. You've missed the boat, we've already been in there before you, okay? So that's really important to understand. Property investment is a science. Let's break into the individual elements. Let's just define the opportunity. Okay, this is actually quite focused. So on a national level, we have a large area here of, we've got quite focused employment. That's a negative thing. That means that we've got an over-reliance on a smaller number of job creators, of employment sectors. When you look on a national level, we have a very high reliance on health, education, retail, and accommodation and food services. Usually this lack of diversity is a poor thing. Potentially it's an exception in this case because you can't really get enough of healthcare and social services and education and training in terms of employment. It's very stable. It's not like it's a mining, an over-reliance on mining. These are things that you can potentially be over-reliant on. So I'm happy to ignore that lack of diversity now. For capital cities, it has low income growth, but it's only part of the story, so that's actually okay. This is poor, very low on a national level. Commute time's actually okay for these outer rings of a capital city. Commute time is all right. Let's dive into this a little bit deeper. Unemployment has just started popping up now, but it's still at very, very low numbers. So even though we have somewhat slower income growth. Unemployment was extremely low here, over the last few years, and it's just popped up to 5%, which is a national average. So we have a relatively robust employment landscape in the Joondalup area. Nothing to write home about, but it's definitely not an area of concern for us yet. New projects on the list. If you can't see this here, $4,000 per capita per spend. That is average across the country. But we have a diverse makeup of new projects coming through the pipeline. So there is a story here. Some of the things that I like to look for are overall gentrification drivers. This is an oceanside area. I like to see infrastructure and spending in these types of, Westfields, mixed-use developments. A lot of these upgrades around, the key pipelines and roadways into the area, office buildings with lots of car parks, etc. It's changing the use. We've got a large marina project up here as well. A lot of marina projects and upgrades. So a lot of the things that you see here are turning a satellite area of Perth into a real focal point. Okay, there's a lot of gentrification drivers going on in this area, and that's the theme. This is the supply map. Okay, so this is some very unique information that we have here at Ripehouse Advisory. It shows you the supply to rain in the last 12 months coming into the individual suburbs in this area. You can see here a lot along the water. You've got under 1% supply. Extremely tight supply, no new blocks available. But you've got this pocket down here in Warwick where you've had 10% new supply in the last 12 months. Think about that for a moment. Even with 2 or 3% population growth, you've had 10% new homes being constructed in the area. This is now the reality that we have to dig deeper into our location research. It is not enough for us to come here into Joondalup and think our job is done. It's not enough to be recommended a suburb and then go, our job is done. We need to understand this supply level data intimately, because one suburb into the next has 4 times more supply coming into the market. With this information we need to understand intimately. So for here, overall, not too much of a concern. I definitely want my supply to be starting with a 0 or a 1. Sometimes I could move into a 2, but we definitely need to know that the areas to stay away from. Population and supply, how do these two mesh in? Remember, this is at a local government area level to begin with. We've got population growth back into the positive again. We've got good, we had a bit of a bump here through the mining crisis over the last 10 or so years, but it's really recovered strongly. It is a really nice family-orientated, middle sort of class, middle income, middle price area of Perth. We had massive oversupply coming in here when population was off a cliff and we had houses still being completed. We had a very strong oversupply. That means there is much more supply coming into the local government area compared to the population moving. Now we have an undersupply. This is very good. Okay, and we are projecting not excellent but okay projected population growth over the next 3 years, about 0.5% per annum. So if we're only getting 0.5% per annum, we really need to be focusing on these markets through here potentially that have low supply coming into the pipeline, because if we buy here potentially or here, there's actually an oversupply in those individual suburbs when you take it at a local government area level. So we have to be very careful. Overall, I've sort of joined all these dots before this. This area is in the top third of all areas across the country. It was, really powering away about a year ago. It's come off the ball slightly, but overall the opportunity in Joondalup is very strong on a national level. Let's have a look at, is it the right time to buy here? I'll skip through these quite quickly. Days on market, very tight. Consistent story in Perth. We've gone through an area at a time of extremely high demand here heading into Christmas. It has slowed down recently. We'll see why in a moment. Stock inventory. It's not because we've got extra properties hitting the market. This is quite consistent. So what's causing this lack of competition? The heat just to come out of that market slightly. Okay, it's not to do with lots of properties hitting the market. Days of remaining supply is steady once again, very tight, but it's not because once again of all this supply hitting the market that the heat has come out of it. Asking price, let's look at the house icon here. We have seen prices now at a high point. We've hit a peak, right? We're up to 6 and 7% above asking price. This is a very heated, boiling, extremely sort of seller's market, all right? and it's now at a high point. Asking price, it started around $600,000 12 months ago. Now we're heading up towards $700,000. And now this is the story. Why do we think the high competition has occurred? Because we're at a market peak. We're at a blow-off top, okay, to use some of those share market type analogies. And this is a very consistent pattern that we do see. We see the stars aligning. We see our buy points emerge, and we're very active in this market around here. We've seen a very nice uplift, and this is to demonstrate us to the depth of things. We see a slight slowdown. If you can remember our recent Wagga Wagga video, check it out if you haven't seen it. This is a very similar pattern where you had a nice increase here, you had a slowdown. What's the market doing? And then you have a blow off top. Well, guess what? We're in the same blow off top here in Joondalup that we saw in Wagga Wagga. We're definitely hitting a market peak. In the last 3 months, the heat has come out of the market. That's probably because prices are much higher than they were 3 or 6 months ago. And we all have to remember, prices are the strongest handbrake to demand. Prices increase, demand decreases. So we've definitely missed our boat here for a buy into Joondalup. Let's have a look at the rental side of the equation. Let's see how long we think it might take for this buying window to reopen. We know that this market longer term is very good. Lots of positive things occurring. Might be 3 months, might be 6 months, it might be 5 years before we have another buying window. Sometimes the rental side of the equation can give us some indications. Tight rental market, extremely tight rental market. Vacancy rates just pop back up again. So a little bit of steam coming out of the rental side of the equation up towards 2%, which is the average. Weekly rents are flying, extremely tight rental market. The yield, rents have been holding, okay? They've been holding with the price growth. Rents flying, prices flying, yields have been holding, okay? But they're not yet back up here to 4.5%. I would like to see them back up to 4.5% in this market before we get another buying window. How long this takes? Look, it's a speculation. It's anyone's guess. The rental market's rents are really still increasing. Vacancy rates are popping back up again. So there may need to be some corrective, market dynamic going on the rental side of the market before we start seeing yields back up here towards 4.5, which we need to see before the buying window potentially would open. So in summary, Joondalup, great opportunity, good opportunity. Market peak, we've missed our boat here. And it's looking like it could be some time before the stars align potentially for another buying window. So, that's where we can leave this 6 monthly update. I wanted to contrast this with the local government area of Bayswater. Okay. In this video, we'll look at the local government area. Well, I'm not going down into individual suburbs of this local government area. That's a very important point. Let's dive into this quickly. I'm aware of time. Employment. Once again, we have, more diversified employment, but the mix of this has changed now. So even though it is more diversified, which is good, retail trade, which is a seasonal employer, is the predominant workforce here. So it's still an average employment area, slightly better in average in income growth. So we're the average there, but we're very good in commute. For those of you that don't know, this has got excellent access points into city employment hubs, etc. So overall employment is average to good. Unemployment has just popped back up to 6%. It's a little bit higher than we would, be comfortable with. It's a little bit higher than average, but it's still not far off the average. It's still not a cause of concern. And a lot of this is going on in the country at the moment with changes to COVID, etc. So look, employment overall is average. New projects is low. Now, this is sometimes we have to be careful here because this is the new project specifically for this local government area where you'll have all these wonderful things going on in the Perth CBD, which does have a positive impact on this local government area. So I do take it with a grain of salt. You don't have the same gentrification drivers as somewhere like a Joondalup, but it's a very different type of area. We want to see more industrial, more education, even sometimes retail drivers in this type of location. The per dollar spend on projects is excellent, but there's a lot of population to spread that across. All right. Overall, though, we do feel like we do have gentrification drivers in this local government area. Once again, we had the lower or dropping in population growth. It has corrected, in the last couple of years, and we do have very balanced coming into undersupply in the market with good population growth projected in the next few years. But this is once again a story we do need to be careful of supply. We don't have any suburbs here with 10% supply like we did previously, but there's a couple there that are a little bit higher than normal. So we do need to be very careful at a street level when we're coming into this area. Overall, 2.8% new supply coming into the pipeline. At a national level, that is a little bit higher than average. We have to pick our spots into this area. Overall, average employment, or slightly better than average employment. Okay, new projects when we consider the wider picture. We've got an undersupply. We've got a very tightening dynamic coming in, but we do have to be very careful with the individual suburbs that we're buying in. So overall, we're considering the wider Perth market in this location, not necessarily the local government area. We are piggybacking on what we're seeing at a macro level, at a citywide level in Perth with this location. Let's have a look at if it's the right time exactly to buy here. Days on market, very tight. No story there. High competition. Something's going on here. It sounds like things are about 6 months behind Joondalup. If you'll correct me wrong, let's see if that's an ongoing theme. We've started to see the asking price percentage above. It did have a very tight pocket, a seller's market. It has had a bit of steam coming out of the market, but maybe this might be a bottom. From looking at the other slides, I have skipped ahead. I'm expecting this to start really, unwinding in the next few months. Tight stock inventory, and it has remained so. So we're not getting any new stock coming into the market. The high competition occurring is not because of a drop in inventory. We've had stable inventory costs, so it is coming really down to a demand side equation. Days of remaining supply, once again around that 100 level. That's very tight on a national level, but it's not extremely tight. Okay, we're not we're not quite there yet down here at sort of 50 to 75. All right, we've still got a little bit of room to continue to tighten them for this growth cycle to potentially continue going. I've gone backwards. Median sales price. So this is a very consistent pattern. All right, it's slightly shifted. We have some time scaling going on here, but we've got a consolidation. We've got a first move up, and we've got slightly longer consolidation here, but we haven't had our blow off top yet. All right, so this market, as of right in this month, we have extremely high competition, and we have the same stock on market, and we've had this one move upwards. Potentially this market is gearing itself up for a nice blow up top. We would expect this to go from 600, potentially 700,000 north if this all comes into alignment. So this is a market that's not far south from Joondalup, but it is set back, a good 6 or so months in that timeline. Let's have a look at the rental market. We do need an impetus. We do need a reason for this blow up top to occur. We do need the rental side of the market to become too expensive and force all those locals back over to the buy side. And we have extremely tight rental market now. Okay, we've got slightly uptrending vacancy rates, which is a little bit of a concern. So we have very few rentals available or time taken to rent, but there seems to be a few rentals that are popping into the market. Okay, that's how I would read that. We've had weekly rents really flying. Okay, so potentially with all this rental growth, there's a very high willingness to pay, right? People are willing to pay a lot to rent, but there's still a little bit of vacancy left in the market. Yields are now at a high point in the cycle. This is a really bullish point for us to identify. Okay, this would suggest, and this is probably the derivative or the outcome from the whole rental side of the analysis, that people are really wanting to move into this area. It's starting to become very expensive to do so. They'll clear through this surplus stock here very quickly, okay, and potentially cause that second upswing into the market. So Bayswater would be a much clearer buying window to us than Joondalup. But as you know, we need to get exactly right at the suburb at the street level. So I'll leave that one there. I'm not going to dive into the individual suburbs and streets, okay? I'm going to have a look into the next local government area. So this has been a favourite, okay? Very common to see this mentioned out there in the public advisory sources. Remember, these are sources where you potentially have a lot of overlap. Are people looking to the same source of information and then fighting against each other? It's an incredible disservice that is done to the individual in some of these examples. You have to be extremely careful of it, because this has probably been one of the worst cases I've seen of it in the country in my last 20 years of experience in the industry and myself as an investor. We have to be extremely diligent when we are relying on public sources of recommendations or, reports, algorithms, education courses, because it's their business model. The more people are in there, the better they do, but the less utility, the less value there is to the individual. All right? It's something we really need to be careful of. I'm going to tell you a really quick story. Why don't you take a minute or two? In America, there's a share trading platform called Robinhood, and they call the movement of people that use this share trading platform, the Robin Hooders. There's a whole, name given to them now, and it was all around the bubble, the GameStop movement, where they would all coordinate together and they would, operate en masse. Well, the reason why this has really changed the game in the States was because of the pricing model of the Robinhood software. All right. For those of you that potentially bought shares in Australia, there is a brokerage fee that you have to pay to trade on the shares. It might be $5 or $10 or $50 or $100, depending on your, amount of shares that you're buying. You pay for those shares, the brokerage fee, because it's your information, right? It's private. Robinhood doesn't work like that. It charges $0 brokerage fee. It doesn't cost you a cent to buy the shares or to sell them. And the reason why they're able to offer it to you free is because they sell the buying recommendations and the selling recommendations to hedge funds, private advisory companies. That is, information is a tangible asset and someone else pays for it. And it's so valuable that they're willing to build a whole business and offer it free to their audience so they can sell the data. Now just think, those hedge funds are able to see where people are buying, when they are buying there, and before they execute the trades, they're actually able to front run them, because they push in line into the queue. So therefore, Robinhood, there's more value to the private advisory, the more people who pile into the free trades. This is exactly what I see occurring in Australia. You have public advisory, and then it's therefore in their interest to have more people piling into their areas, okay? And then you have private advisory who are front running and using this information and potentially private and very expensive sources of information to get in first. And this is what I see. It's in the private advisory's interest to have less clients and getting in earlier. It's in public advisory's interest to get in last or later with more people. Those individuals suffer, right? You're not getting the right buy price when you're you might get the free trade, but you've just had the price pushed higher because of the hedge funds leading in there. So the individuals in the individuals in public advisory, they suffer. This is what we see here. Rockingham is on everyone's lips, all right? We've been, as a private advisory, we know all about Rockingham, and we've already positioned and made many positions into key locations throughout there. As public advisory, education courses, forums, groups, reports, algorithms, it's in their advantage to now spread the word on these types of locations. As I mentioned, I've said this before, we've had reports recently. I've had a conversation with a sales agent. They're like, I just don't understand what's going on. I put a property on the market. Within a day or two, I get 50 phone calls and they ask me the same questions. It's as if they've been trained to say it by the same person or education group or forum or whatever it might be. They've been and told the same questions to ask. The sales agents think it's the biggest joke going around, and then suddenly the offers start coming in. There's no price discovery. They're all leading forth with best offer first. The negotiation skills are very absent, and they're coming in there consistently paying way over market. The sales agents are actually having a big joke and a field day at the moment of what's going on. Private advisory works very, very differently. Private advisory relies on very long, prolonged relationships, getting further way before any property goes towards an open market, environment, and putting those eggs at that point so we can firm up those relationships throughout a purchase. So I'm using this now as an example. Act with very strict caution when we're looking into these types of markets. I'll move through it quite quickly. Employment, average, all right, average to good. We've got healthcare and social services and education and training as very big providers. We've had lower income growth, right? But there's exceptions here. And the commute time when you consider up to the Perth CBD is a little bit higher than we'd like, but this is its localised employment. A lot of what's going on in Rockingham has to do with people living and working in the area. There's a lot of good drivers of employment in this location at the moment. We generally expect this for the outer ring of these large cities, so there's not much concern here, all right? I'm not concerned at all, because employment in this location does need to be apples with apples, and in this case it's generally pretty good. So stick around throughout this Rockingham investigation, because I am going to be doing some suburb and street level analysis. We need to understand this. Overall employment is good. Unemployment, there are pockets of very high unemployment. Okay, we need to go into this market with all eyes open. There's extremely high value and there are a lot of very positive aspects with Rockingham, okay? But we do need to be acting here with a lot of care and a lot of due diligence. New projects on the list. This is punching, very well above its rate. It's very well for a WA economy, for a satellite area of a key city, which is doing very well. It's not up to the same levels as potentially separate regionals, but the type of new projects coming into this market are excellent. Very good for ongoing employment and utility. Health, lots of industrial employment, very strong employment pipeline for this Rockingham area. That is really a story of what is going on here. We've got incredible undersupply coming into certain markets. So this is another huge part of the Rockingham story. We don't rely, 1.5% population growth. We can see over the last decade that we've had outstanding population growth on a national level. We've also had a lot of supply that has been meeting that demand. But as it stands now, we have excellent population growth forecast, and we have an undersupply that is emerging. Let's dig into that, because if you don't get this right, once again, you're completely, you might think the local government area is good. You hear all the good things in public advisory about Rockingham, but you're completely bought a lemon because you've got the suburb level analysis wrong. If you're coming down here, Kerala, 33% new supply in the last 12 months, all right? You've got the inland areas with a lot of supply coming in. You've still got exceptions to the rule down in and around here, but you have a lot of, these are quite established areas, guys. These are, you're not really going to, supply in these markets is pretty tight. There's not much scope for new homes. Close enough is not good enough. If you're coming into these inland areas and thinking it is okay, you're potentially on the wrong side of this acquisition. We do need to understand this. Overall, extremely tight supply in the right locations, very good population growth, and good new projects in the pipeline. This is a national story, there's no doubt about it. Are we too late to acquire here? Days on market is tight and tightening, very good. High competition, well, it's just come off a little bit. It was high here, it was high here. Now we've hit some sort of slowdown. What's occurred in the last month or so? Sorry, I've just gone back. What is occurring here? Is this something that is consistent across the other metrics? Supply is not the issue. It is a little bit tighter than normal, but still not dramatically. Days of remaining supply, tight, still tightening, but once again, not extreme, very consistent. Percentage above asking price, it's really started to rocket forth in the last few months and it's continuing really spiking. This is starting to indicate potentially a theme with this, all right? We've continued to have a runoff up towards the top. Let's see if this is consistent. This is the asking price, very consistent and strong pushing here of asking price over the last 12 months. And this is median sales price. Very consistent story. It's the same graph that we saw in Joondalup, very similar. Same graph we saw in Wagga Wagga. Consolidation period, we had a push off here. We've had a slowdown and a market gathering its thoughts on the matter. And then we've had a nice blow up top. This really hasn't kept running on here. It's probably got another $50,000 to run and probably another 10% before it does have a slower down and a consolidation phase. It's not a buy zone here, guys. This is a buy zone, this is a buy zone, this is all a buy zone. Okay? This is only if you're an extreme expert with localized private advisory connections where you can get access to deals very early on in the piece and control the variables. That is the only time I would consider buying at this level of a market. All right? This is not enough to justify an entry point. I'm off somewhere else. Rental analysis, let's see how much steam is left here or how long, potentially till the peak and then the correction after that. Tight rental market, vacancy rates just popping up. So once again, we're confirming things there with the steam blowing out. Rents are very strong, but they have now stabilised. So you don't have that same rent to buy pressure, which might suggest that the peak is coming into the market. Yields have dropped off. We haven't seen them coming in strongly. So this is a really clear indication, guys, that when you see these words, these names dropped around and thrown around, sometimes it might not be for your interests. They might be spreading this information for their own interests. And we have to really critique, and it might not be deliberate. They might not realise that the better they do with the recommendations that they put out there or the conversations they have, the more people are potentially fighting over these markets, artificially in some cases. So that's a market here. I was going to jump into the street level analysis here and suburb level, just so we can get our bearings. I am aware of time. We have been going for quite a while. Are there markets here? Very tight vacancy rates, but where the supply is coming in, we do have slightly higher vacancy rates coming in. Even two suburbs next door to each other, we've got under 1% vacancy rates and 2%. Days of supply, so I won't go through that one. Vendor discounting. We've got extremely, negative discounting here and here, but right next door, we've got an extremely strong seller's market. A blow-off top occurring here, whilst we might be just getting our steam sort of built into this market just to the north. So even when we find these local government areas, we have to start becoming experts at a suburb level, because the timing can be very different, even just over the way and the time over the street. I'm using this suburb as an illustration. This is a rookie error, something that I am extremely concerned about that I don't see occurring very often. This is a suburb where you might see people buying Port Kennedy. This is the street level price terrain, all right? You can see the the median price here for the last little while is 371,000. Over the other side of the street, and that little pocket around here is 511,000. So you buy a property here for 450, you think, great, I've bought a good property. Well, you've actually overpaid almost 20% for the other properties around it. You pay $450,000 for a property here and you might have the bargain of the century, and they might be within 100 metres of each other. You have to understand the subtleties of the pricing terrain and how that is impacted, or what is occurring on a localised level. Public housing potentially causing a lot of these issues. You have to understand how the rent terrain impacts and changes across a suburb, and how that impacts yield. All right, it is okay sometimes to target a suburb with 4% average yield and still buy something reliably at 5% or plus. All right, we need to understand this pricing terrain, especially with these areas that have an ocean, have beachfront in reasonably close proximity. We need to take that deeper dive. If you would like to understand the types of properties I'm currently looking at for friends and family, then I've recorded a 25-minute video explainer video. It's free to register to view. You can be watching it within the next 20 seconds, just going straight into it from here. And in that 25-minute explaining video, I'll be taking you through in a lot of detail the types of properties that we're focusing on to take advantage of the current opportunities out there as property investors. If you'd like to register for that video, there is a link here now or down in the comments, the description of this video. I look forward to seeing you there.